Hello, it's Robert Miner with Dynamic Traders Group with a short video that we do for our YouTube subscribers and our Twitter followers, where we take a look at one or two markets and see if there might be a trade setup coming up in the next few days or a week or so. What I'm going to do today is I'm going to take a look at the two markets we've looked at in the past 2 weeks. That's the S&P and Gold. Keep in mind that these videos are meant to be educational as much as alerting you to a probable trade setup. And as I say in almost every video every week, learn to trade. Trading is not about forecasting. It's about identifying conditions with a high probability outcome where you can develop a specific trade plan with acceptable capital exposure. Well, a really important thing to learn is whatever method of technical analysis you use. We rely a lot on Elliott wave and fib time and price strategies that I've developed over the last 30 years or so, and multiple time frame momentum position, is that no matter how strong the technical picture is for a probable reversal, we have to demand that the market, number one, makes a reversal, and then what I call a reversal confirmation signal. And in most cases, we don't buy or sell on the reversal signal. We recognize when that's made and a market is in a position for a reversal, and then we identify a reversal confirmation signal, and if that's made, that's the trigger for a specific trade strategy. So we're going to look at these two markets, and we're going to look at reversal signals and reversal confirmation signals. So let's get started and begin with the gold market. This is the gold daily chart. It's the December contract daily chart. And last week's video did a deep dive into the gold position, and the conclusion was this past week is that gold would be in a position to complete at least a weekly low. And so we were going to want to look for setups for long positions. So when a market comes into a position for a probable reversal and to make a higher time frame reversal, in this case a probable weekly low, then we want the market to make a solid reversal signal. And that reversal signal, well, we'll take a look at one as we continue through here. And then to confirm that reversal. So let's add some data on this. This last bar on the chart is last Friday, September 16th. I'm recording this the afternoon of the 23rd. That's why this data is still changing, because the day isn't complete yet. So let me add some data on here, a bar at a time, and we'll see where we're at. There's Monday. And on Monday, the daily momentum made a bull reversal. So we should be looking for a reversal signal, and that means the price making a reversal. Typically, that just means a higher close. Closes are very important in all markets, where a market closes. I realize the futures markets are 24 hours basically, but the close of the high volume trading day is important in that position. Let's add some more data. Add another bar, actually closed down a little bit lower. We're now been a couple of days for gold and the daily momentum being dual look back oversold. That's a really, usually a pretty strong position that a daily low is very near. Let me add another day. There we go on Wednesday, the exact day of the Fed announcement just a couple of days ago, is gold made an outside day with a higher close. So that's an outside bull reversal day. Now, that typically is a pretty good reversal signal. It's a little dicey right here. Just use some simple pattern analysis that this has been sideways for 4 days. That's typically a low is made and the market immediately continues to rally. We call that like a spike low. But this is a solid reversal signal. The technicals were all there for a probable low. So this is a reversal. Now we want a reversal confirmation signal. And that's what's really important. I really talk a lot about that in the trading course that we have available now. So what's a reversal confirmation signal? Well, it can be as simple as, the next day making a higher close. That would be some follow through to this reversal day. What I had for our report subscribers is that we want to see a close over these past few days. We want to see a breakout of what we might call a trading range to confirm that the low is complete. So we're looking for a buy to go long on a close above 1689.90. So we're in a technical position to make a low. You can review the video from last week about gold, the details of the technical position. We had a daily reversal signal with the daily momentums making a dual look-back bull reversal. So a reversal confirmation would be follow-through to the technical position and the price reversal on a close above 1689.90. Again, reversal confirmation signal. So let's add another bar. That's Thursday. Didn't make it on Thursday. It closed higher, but it didn't close above this trading range. And because this had just been sideways, that's why I wasn't looking just for a higher close, but a breakout of that trading range, more or less. And then let's add one more day. There we are. That's Friday. And of course, Friday, that's today, gold has been down, not too sharply, but it's certainly down and taken out this trading range from the last week. So where are we at with gold? Well, number one, the longer-term position hasn't changed, in that gold is nearing an extreme position to complete a weekly low. So we want to see a reversal and a reversal confirmation before we actually enter the market. So now let's take a look at the S&P. And about 2 weeks ago, in the video that we did for our YouTube followers and Twitter subscribers, or I guess I got that backwards, but anyway, as of this day where my cursor is, that's Friday the 2nd, that's when the video was recorded. You can, again, listen to that. But there are a couple key points in that video. Number one was, should the S&P, this is the SPX, the cash data, close below 39.1174, that's what I got labeled as wave one swing high, it would indicate that this was a completed ABC correction. And eventually, the S&P should continue to decline to below the June low. Really important information. I really emphasized it in that video. The other piece of information is that the S&P was probably near completing a daily low, but any advance should be a correction within the bear trend. So let's add some data on. Again, this is 2 weeks ago. Let's add some data. Here's one more day. The next day, on Monday, is the SPX close below this level. Now, that doesn't mean it's an immediate go short signal. It's just the meaning of it is that, and it's very important, is that this advance was a correction, and eventually the bear trend should continue to below the June low. Boy, that's a really important piece of information to have. We'll add a few days on here, and indeed, the SPX rallied. We call that a daily trend till the daily momentums got overbought. We knew we're at or near completing a daily high. So I'm going to add some more data on here. Then I'll explain some of these lines that we got. Well, this is right up through Friday, and I'm recording this again about 3 o'clock now in the afternoon on Friday. Boy, it's just been a terrific down day. And the S&P, we won't go into all the details, but the S&P is again in a potential position to complete a weekly low. But it has come right down, driving the daily and the weekly momentums back into the oversold position, just like they were back near this low. The dailies were, well, the weeklies are also dual look back oversold. And there's a bunch of price relationships right around here. 100% alternate price projection of this decline, 100% alternate price projection of this decline. And then, of course, it's the swing lows from back in June, which everybody's going to be alert to. And these are what's called Andrews median lines. And it's coming right down to that median, what that's called the median line, or the warning line, Andrews warning line. So there's some chart geometry, there's some significant price relationships, there's real critical low. Boy, if the S&P were to close below that, I suspect there would be just another panic liquidation. But what you need to know is that the S&P is in a technical position to complete a daily, if not a weekly low. So you want to be prepared for that. You also want to be prepared for then if it makes that reversal signal, what would confirm that reversal? So in other words, even if you're a short-term trader, you wouldn't go long just on the close, particularly when the higher time frame trend is obviously bearish. But this is a pretty significant area for a potential low, keeping in mind that any advance should be a correction within a higher time frame bear trend that probably has quite a ways to go on the downside. But that advance should be a correction, and we would then focus all of our attentions on identify the end of that correction. So next week, look for a potential reversal and then a reversal confirmation and probably sideways up for at least several days. So that's what we're looking at over the next week or so. And keep in mind, we're not forecasting anything. We're identifying the technical position of the market. Well, that's it for today. Please, for the next week, stay safe, stay healthy. Remember, trading's about identifying conditions with a high probability outcome. It's got nothing to do with forecasting the market. That's it for today. Everybody take care. Robert Miner, over and out for now.